B of A, Wells Fargo, all the traditional banks, they say no or whatever. And sometimes you need the money quickly. There's something called hard money loans or private lending. You can go to pretty much, find them on the website. And we're going to be learning a little bit more about those specifically from our friend, Jake Goldfarb. What's up, Jake?
How's it going, guys? So today we're going to be talking about type of private lending called hard money loans. And really what these are, like Kenner alluded to, are kind of a traditional form of financing. Regular banks, a lot of regular funds even do not do these types of loans. But basically what they are is they're a type of secured loan that's very short term, higher interest rates, unfortunately, because the underwriting process is much shorter than a traditional bank. A lot of traditional banks are going to be looking at 3 or 4 months to get approved, whereas with a hard money loan, it's really whatever the lender, whether that's an individual, maybe a syndication group, and the client, maybe a developer or just a real estate investor, whatever it may be. It's whatever deal they determine um, to be good. So
Mm-hmm.
there's a lot of advantages. There's some drawbacks in the sense that it's higher interest and shorter term lengths, but it can really make sense for a lot of investors depending on their situation.
Yeah, we're getting more and more calls. So let me explain a little bit about the history behind hard money loans as it relates to Vast Solutions Group. And by the way, I'm Kenner French with vastsolutionsgroup.com. So, our company's been around since 69, founded by Gary Coons years ago, truly in 1969 in Bellevue, Washington. For years, we just did, insurance. We did finance, and all of a sudden, I took it over in 2006, melded a few different companies underneath the umbrella of Vast Solutions Group and then changed it to vastsolutionsgroup.com not too long ago. And then basically what happened was, people have been asking us for loans, because so many of our clients are real estate investors or entrepreneurs and they want money for loans. And being an idiot, I'll fully admit, being an idiot, here, Kenneth French admitting being an idiot, I would say no, go to Wells Fargo, go to B of A. Finally, it dawned on me that these people really, really need help. They're coming to us for help getting finance for properties. And, nowadays it's even sometimes more difficult to get loans from B of A, from Wells Fargo, from all the traditional powerhouses, and people need money quickly, et cetera, et cetera. So I thought, well, wait a minute. Obviously we've grown the commercial property loan origination group tremendously. So at the same time, some people can't get traditional financing or for whatever reason. So yeah, they want private money. So, and Jake obviously has been doing this for as young as he looks. His family's been doing it for, I guess now 3 generations, and he knows a lot about, private money. So that's the reason he's on here talking about this. So our viewers and listeners, please really listen closely, because there's going to be a time, I will almost promise you, there's going to be a time when you need private or hard money. There's just no doubt. So let's kind of really get into the thick of things. I'm going to ask you some pretty pointed questions, and we're going to have a fun little dialogue for maybe a half an hour, Jake. So
Awesome.
let's talk a little bit about the interest rate. Obviously, interest rates change and really determined by the circumstance. But what's some interest rates that you've seen from the past or now that are working in the marketplace?
So there's a lot of different ways that people will determine it. It really depends. I've seen 13%.
Mm-hmm.
Um, and that can be on the lower end sometimes.
Yep.
I've heard of loans that once maybe there's a default clause in kind of the underwriting document, and once the client goes into default, then the loans can get as high as 20%.
Mm-hmm.
Um, so, like I said, it's much higher interest that you're going to be paying on these types of loans, but then you really do have an advantage because you just don't have to go through a super long, rigorous process. And also, I mean, you could talk to a lender the first of the week and theoretically be funded by the end of the week, which really does not happen with any other type of financial product. So let me give an example of a good situation that a hard money loan would be a fit for. Maybe you're looking at a property and it needs some rehabbing done, but you have a tenant that's going to be moving in uh, maybe within 2 weeks, and you need capital in order to you know do that rehab, but you just don't have cash on hand. Then that maybe you have a certain amount for kind of a down payment, um, but not the full amount that you need to actually you complete the renovations, then a hard money loan would be a great fit for a situation like that. Just because if you went to a traditional bank for a loan in that situation, you wouldn't hear back for months about whether or not you were approved. Um, so yeah, their interest rates can really vary, and it's really just whatever the lender and the client figures out. But us as an intermediary between the two would assist in the process and kind of negotiation of determining that interest rate.
Yeah, and you mentioned something really important. You mentioned the document. I really believe, help me if I'm wrong here, but I think the document means so much because just a couple of words can change so much. It could really
Yeah,
mean the difference between success or defaulting on a loan for you, let's say, if you're trying to get,
absolutely.
financing. So why don't we go over the document a little bit? What do you mean by the document? What maybe outline some clauses that you think are pretty important as it relates to, me, let's
So
say I'm trying to get
yeah,
financing.
absolutely. Yeah, absolutely. So basically, it'll be most lenders will have a format that they use for every single deal, and then they just kind of switch around the metrics and information depending on a specific deal and who the person they're lending to is.
Hmm.
But basically, the lender will take a deed of trust, what's called deed of trust on the property,
Hmm.
and that property that the investor in lending in, most of the time, there can be personal guarantees. Sometimes other properties can be used as collateral, but that deed of trust basically ensures that in the event of a default,
Hmm.
the lender can take that property, that's their collateral, that's kind of what they use as a safeguard in case something goes south with the loan. Can take that property and then they'll bring it to auction. And at least in the state of Washington, you have to bring it to auction. Let's say that it's $1 million loan and a $3 million property,
Hmm.
with 15% interest, and just to make it simple, you're looking over a year, so that's about 1.15 million that the client would owe at the end of the year. Let's say
Yep.
they can't make those payments, they default, then the lender would put the property up to auction,
Hmm.
and they would sell it on the auction. And then let's say it sells for 2 million.
Hmm.
The lender wouldn't keep that full 2 million. They would only recoup their fees, their interest, and the principal that they're owed. Um, so then the spread on that 1.15 and 2 million in my example, that 850K, and there'd be other fees and stuff. It probably wouldn't be as much as 850K, but it would go back to um the client who took the loan.
Yep.
So in the event of a liquidation, foreclosure, the lender wouldn't keep the entire property. They would just recoup their fees, interest, and the principal. So that deed of trust ensures that they have the ability to do that, and they have the ability to foreclose on the property in the event of anything going wrong with the loan,
Hmm.
or the client just not being able to pay the interest and principal.
And I think what's important, if people are thinking about getting into the business of providing hard money loans, I was just talking to a kind of a novice in that arena, big time investor, and he's now thinking about getting into being a hard money
Hard
lender.
money lender,
I
yeah,
think it's pretty important that you're not doing something that's going to disadvantage the borrower, because you're not. Then it becomes loan to own. You kind of, I hate to say it, but screwing over the investor or the
abs abs
borrower. You gotta,
absolutely, yeah,
you gotta be a steward of good. So
a hundred
anyway, I want
percent,
to go into that a little
yeah.
bit.
Yeah, I believe in most states, there are what are called usury laws, so interest can't be exorbitant. There are specific types of loans, and I think that's why hard money lending can get um, a bad rap. You hear about somebody charging 50% interest, so that's in my opinion, that's completely not reasonable.
Totally.
Um, there are actually, and this is getting a little off subject, but there are business loans that get around those usury laws. There's something called MCAs, merchant cash advances, and basically what those are is that's taking future credit card receivables um, as a payment for a loan. So
Hmm.
basically, what these are is a small business usually is the target of them will get a lump sum of cash, and then they basically sign a contract that will give sometimes 40%, sometimes 50% of their future credit card receivables. So like on a $10,000 MCA, they might be paying $15,000 by the time everything's said and done. And these are super short term. And with hard money loans in real estate, you're not looking at those types of interest rates. I mean, that's pretty unreasonable in my opinion.
Mhm.
Um, and most states have usury laws. I think Utah doesn't, is one that I know off the top of my head. And the only reason that it would be advantageous for a client, for a borrower, to not have to deal with usury laws is because sometimes, it does make sense to have high interest on very high risk loans. Some of these real estate development deals are very speculative, um, and that's why there is higher interest a lot of the time.
Yeah, I agree with
Um,
that. I totally agree with that.
and most states too. I mean, I'm not off the top of my head. I don't know um, any states that are lend to own where a lender can take the property and just own. Like the example I was using earlier. Let's say uh, it was $1 million loan, and the property was worth 3 million. Then I don't really know off the top of my head any states where the lender would just own that $3 million property, could turn around and sell it for two, or excuse me, turn around, yeah, maybe even turn around and quickly sell it for 2.5 and profit, $1.5 million. So, it does get a bad rap in some sense, but it can be a great option for borrowers, and if the whole deal pencils, then it really can make sense to utilize a hard money loan.
Yeah, I think sometimes you're right. It does get it gets a bad rap because Uncle Vinny's going to come after you if you don't, if you don't make the payments or what have you. But that's number one. Then number two, but in some cases it really comes through. I mean, if I can't get financing and I'm really in a pinch, I need to get a
Yeah.
hard money loan as an example. Plus, on the flip side, sometimes there could be handsome returns that could be made by the people who are providing the hard money loan.
Oh,
It
absolutely.
sometimes works out for the betterment of society. I know it sounds
Exact.
crazy, but I would say
Yeah,
that
well,
in
it,
most
it
cases.
works out for the two, exactly. It works out for the two parties as long as the deal pencils, and it
Mhm.
makes sense. Another thing too, good example that you're bringing up is, if you need a loan quickly and you can't come up with the down payment for a traditional loan,
Right.
maybe even if you do go to a debt fund that can do a loan within a month or something, you can get sometimes. I mean, it's up to the borrower and the lender to figure all these things out. As long as the borrower signs on and is comfortable, you could get a 95% loan to value on
Right.
some of these loans. Like there's a lot of options. There's a lot of flexibility, and when we're looking at our traditional financing sources, there's just not much flexibility. I mean, you and I know that from speaking with lenders. They have to abide by a ton of underwriting
Mhm.
guidelines and regulations. A lot of them are subject to loan committee, so it's like there's just a lot more flexibility.
Yeah, for me as a borrower, if let's say as an example, I can't get financing or whatever the case is, and I look at hard money loans and I have to spend a lot of money because the interest rate's higher. But then again, that would mean, hey, I'm making at least a little bit on the deal versus not making any on the deal because I can't get the loan through commercial property normal financing
Yeah.
banks. So and by the way, to usury for the people out there, usury rules and laws in most states legally, by the way, you could get around that by dealing with an LLC. Usually, usury laws apply to individuals. And I'm not, it's legal, by the way, it's moral, etc. So if there's an LLC involved, you get around the usury laws. And sometimes these interest rates for hard money lenders are above the usury laws. But then again, going back to my point, sometimes would you rather get a deal and make some money versus not get a deal and make no money? But it really depends on the circumstance. And I think the document is way important because if the
Hmm.
document is written in a way, let's say you're the borrower, if it's written in a way that it really hinders you or hurts you, disadvantages you as the borrower, you're going to have to go the other way. Likewise, if you're the lender and the document isn't in your favor, it's totally to the benefit of the borrower, there's issues. So the document, I think, means a lot. Really, you
Absolutely.
have to
Yeah.
really, really cross the T's, dot the I's, and understand what the document says. Have it reviewed by a true
Read the
attorney who
entire
understands
document.
hard money
Yeah.
loans, and then go from
Yep.
there.
Yeah, absolutely. And on both sides, if there's something that's missed in the document or something isn't phrased properly, then like I've heard of stories of lenders not being able to foreclose because
Yep.
the borrower nitpicked a specific passage or phrase. And yeah, like you're saying, it's the document's probably the most important thing. and just making sure that all the terms of the loan both parties agree to.
Yeah, speaking of a hard money loan, so believe it or not, I read about this. There was a hard money loan that was offered on the Eiffel Tower, and it showed,
Oh, wow.
the whatever, let's say the height of the Eiffel Tower, let's say it's 128 feet, whatever it is,
Yeah.
and it showed, theoretically it'd be feet, right? You have the two ticks, right? And
Hmm.
instead it was, I'm going to make this up. I think it was 12 point or 1 point, let's say it's, 1.1, 2.8, and just one little tick. So it was in
Yeah.
inches. So the hard money document showed a small miniature Eiffel Tower, and people were dying to give money for it versus the wrong, obviously
No
the,
way. That's
yeah, totally.
crazy.
Yeah, there's lawsuits, and the guy won because, well, in the end, it was accurate. They just
Right.
didn't read the document. That shows the really validity, how important it is to get your documents right when you're talking about hard money loans or anything really. But so I'm off
That's
topic.
very interesting.
It's pretty
No, no,
interesting.
that's a good point. Yeah.
Yeah,
So, yeah, and that really is a good example because let's take a real estate project here. If there were, let's say they mess up the square footage in the hard money loan document, then maybe the lender's like, oh, I'm more than happy to lend on an 1,000 foot, 1,000 foot wouldn't be realistic, 10,000 foot warehouse instead of a 100,000 foot warehouse because it's
hmm
just a much smaller development. So it's yeah, that's a good point, and you really got to read the document. That's extremely important.
Yep. So what about
We've all been there with, you scroll through like Apple's terms and conditions and you're just like,
yeah.
forget this, I'm just gonna sign it. That's definitely not what you want to do in these situations, and you really got to do your due diligence and bring it to a lawyer, like you said.
Especially in the deals we're doing at vastsolutionsgroup.com, our minimum is $2 million. So we're talking real money. If you're trying to get a quote hard money loan for 10 million bucks and there's, just a small little issue with the documents, it could cost someone a lot of money. So anyway,
Yep.
I think we've driven the point home. Look at your documents, make sure you understand them, have a great attorney look over them. Sorry,
Hmm.
let's get back to some kind of the nitty gritty, if you will, of private money. So what about the thought that there's so many, well, now that private money lenders are popping up, what about the from the borrower's standpoint? Are
Hmm.
there some kind of considerations with working with a good, let's say, a good hard money lender, or does it really not matter because all you're doing is getting money? What are your thoughts there?
No, I think it absolutely does matter. And there are going to be, whether it's hard money, whether it's bank debt, a debt fund, whatever it is, there's going to be reputations that these individuals or groups have, and I do think it's important to work with one that has had a good experience with other borrowers,
Hmm
because so maybe go online and look at the reviews, look at what other clients say about that individual or group, because the odds are your experience is kind of going to be um, similar to the other people who have worked with that person or group, um, and yeah, you just wouldn't want to work with a lender who is trying to maybe not looking out for the best interest of their client. You don't want to work with someone who is looking to take your property. You don't want to work with someone who doesn't actually think that your deal pencils and that you'll be able to get the property cash flowing to pay them off.
hmm
Um, so yeah, I definitely do think that their reputation matters, and you want to work with a stand-up individual or group.
So, obviously, we can work with people in every state. And you work with people in every state. Does it really matter, though? I mean, does it make more sense to work with a private money lender who's local
In your
versus
area? Oh, that's
all
a
over
good
the
one.
place?
Um, I would say they're gonna have more familiarity with your market, so it may be easier to get the loan done. It'd be a lot easier for them to go inspect the property,
Mm-hmm.
because it's very risky to lend on a property that you haven't even seen in person.
Mm-hmm.
Um, so I do think it'd be easier, but there's definitely hard money lenders who will do loans out of state. It's just whatever you can figure out with the lender, is really going to be appropriate. I'd say if speed is your number one concern, then working with someone local, if you can find someone local, is great. And we connect borrowers with people in their hometowns and kind of home regions all the time. Um, And I'd just say that it's yeah, just from a speed perspective, it'd be much better so they don't have to fly to whatever city they're lending on,
Mm.
or fly to whatever city the property that they're lending on is in.
Yep. So what's let's say I want to get involved. Let's say I'm a real estate agent, and that's not good. Yeah, no, let's say I'm a real estate investor and I want to get involved in hard money lending. What are some of the resources that you think can help me as a, kind of a person who's just getting my feet wet in hard money loans and lending?
I would probably consult, honestly, a broker would be a good individual to consult because they've seen a lot of different deals.
Mm-hmm.
They can kind of give you some background in the industry, talk about individual deals where they've seen things go wrong.
Mm-hmm.
Um, Maybe connect you with a hard money lender who has a proven track record and is really good at what they do.
Mm-hmm.
So if I personally were trying to do that, then I would, I would really just talk to someone with experience in the industry and try and learn from them. Um, uh, Being an experienced real estate investor would definitely help if you were looking to become a lender because then you actually know what to look for in these deals and which deals are going to work and which ones aren't. Um, if you were a first time borrower, I would just use the resources that we're lucky to have, Google reviews, um, just kind of word of mouth if you're looking at working with a specific lender. Uh, so yeah, those are kind of the avenues that I would take. But like you were saying, you definitely do want to take it slow and kind of get your feet wet at first and not just jump in, whether you're a borrower or a lender, because there's a lot of risk associated with these loans.
So on the flip side, let's say I'm a borrower and or a lender. Can people come to you for some consulting? Is that a service you provide?
Absolutely, yeah. I connect borrowers with lenders, and we also connect lenders with borrowers. So we do pretty in-depth consulting for hard money lending, and we have a lot of really interesting deals that we're working on actively right now. So yeah, I'd be happy to give advice. Would love to connect with anybody who's interested in, maybe if they're not even interested in getting a loan or providing capital to investors. I'd love to just kind of talk with them and discuss the industry because I find it very interesting. So I'd
Yeah,
love to connect.
yeah. And how do people get a hold of you?
You can reach me at jake@vastsolutionsgroup.com. That's my email, and then we can set up a call from there.
Jake, is it JAKE at
Yeah,
vastsolutions.com?
yeah. Jake at vastsolutionsgroup.com.
Sweet, which happens to be the web address if you want to learn anything more about what vastsolutionsgroup.com does. We do tax, we do finance, we do artificial intelligence. Obviously, now we do some hard money lending, really in the commercial property finance space, if you will. And then we're doing a little bit of asset protection. We're doing a little bit of a little bit more services here as we grow. We've been around since '69, but now we're really catching the wind in our sails, and things are getting even bigger and better here at vastsolutionsgroup.com. So we
Hmm.
really appreciate you being here
It's
and learning
exciting.
about our services. Hopefully we've added some value to you out there. If you need anything, hey, I'm at Kenner at vastsolutionsgroup.com, or again, go to our website, vastsolutionsgroup.com. Hopefully we've added a ton of value. If we have, please tell your friends. We're definitely trying to get a little bit bigger here and there, and we're having fun doing it. Once again, it's Kenner French. Thanks, Jake.
Thank you, Kenner. Thank you, guys.